Today, I'm going to give you an overview of funds. I would first introduce what is fund, then we will look at the benefits of investing in funds, as well as major types and characteristics of funds. Finally, I'll explain major risks of investing in funds. First of all, what is fund? A fund is a type of financial instruments that gathers money from investors to make investments. When investing in funds, investors' funds are pooled together to buy a basket of securities based on the investment objectives set by the fund managers, who in turn provide investors with professional fund management to help them diversify their investment risks. You may wonder why people would like to invest in fund. Firstly, it is very simple to invest in funds, while pooled investment can also save costs. Secondly, investors can access to a medley of securities and products covering different markets and sectors. Thirdly, risks are diversified as investments are spread over in different markets with low correlation among their returns. Besides, fund managers and analysts are professional in identifying potential investment opportunities and make investment decisions. Finally, different types of funds provide investors with a convenient and cost-effective way to access both local and overseas investment opportunities. Next, I'm going to introduce some basic types and characteristics of funds. There are a number of kinds of funds. Funds can be divided into private funds and public funds, depending on whether their beneficiary unit can be subscribed, redeemed or transferred at any time. Open-end funds and closed-end funds depending on ways of offering. And money market funds, bond funds, equity funds according to investment portfolios. Listed and unlisted units of a fund may be simultaneously offered to cater to varying needs of investors. An unlisted fund can offer listed unit class for listing and trading on a stock exchange, while an exchange-traded fund can offer an unlisted unit class for distribution in the primary market. Furthermore, approval of the SFC must be obtained before a fund is publicly marketed in Hong Kong. Otherwise, unauthorized funds can only be offered by way of private placement. Investors should be cautioned that offering documents of unauthorized funds may not have been vetted by Hong Kong regulators. As characteristics of funds vary from case to case, investors should keep themselves informed of the features of each fund by reading the offering documents and product fact sheets. If the fund unit is not listed and not traded at the current market price on the Hong Kong Stock Exchange, you should be aware of the fees. For example, subscription fees and redemption fees are commonly charged. Besides, different funds usually require different minimum investments. If there is a lock-up period, extra costs might be incurred if fund units or assets are redeemed during the lock-up period. Moreover, if the fund can be early redeemed, please read the relevant terms to understand under what circumstances the fund manager will redeem the product, and what you can get back. Despite the advantages of investing in funds, investors should also pay attention to its potential investment risks. First of all, there are economic, political, monetary, interest rate and other risks associated with the investment market or the designated industry. In the worst case, the value of the fund may be significantly less than the amount of your investment, and you may even lose all your principal. If the fund is classified as financial derivatives or funds employing financial derivatives extensively for investment purpose, these instruments may be highly volatile and expose investors to higher risks. Sometimes, the fund management company may invest in over-the-counter derivatives or bonds issued by counterparties. If the issuers or any counterparties of the product fail to fulfill their obligations, you will suffer losses that can be as high as the total value of the derivatives or bonds. In general, funds not authorized by the SFC may not be marketable and lack of liquidity during stock trading hours. Finally, the subscriptions or redemptions of a fund by investors may have a potential impact on the value of a fund. In particular, if the subscription or redemption involves the purchase and/or sale of the underlying investments in a fund portfolio, that would incur trading costs and related expenses including transaction charges, brokerage fees, taxes and bid-offer spreads. the aggregate costs arising from such transactions would be charged to the fund and therefore dilute its NAV. As a result, interests of the unit holders could be affected. Lastly, as the financial market is ever-changing, investors may earn returns or suffer losses from investment. Therefore, before making investment decision, investors should read the offering documents of related products carefully to make sure they fully understand the terms and conditions, product nature and the risks involved. In addition, investors can also consult investment advisor about all the information of characteristics and risk exposure of the products.